Nouriel Roubini once said, the global financial crisis, missed by most analysts, shows that most forecasters are poor at pricing in economic financial risks, let alone geopolitical one. Keep this in mind as we discuss today the impact of the global financial market in our interview with Brent Johnson. My name is Dr. David Oualaalou.
And I'm Elizabeth Ann Stewart.
And you are watching Geopolitics in Conflict. Let me introduce our guest today. So today we have a good show for you. We are very delighted to have Brent Johnson join us, given his busy schedule, to carve out some time for us. We truly, truly appreciate that. But before we launch into a conversation, an in-depth discussions with Brent, I want to present you with at least a brief bio so you have an idea who Brent is. Well, Brent Johnson brings over 20 years of experience in the financial markets to his position as a CEO of Santiago Capital, where he manages about $175 million for high net worth families via separately managed accounts and a private fund. So, welcome, Brent, to Geopolitics in Conflict.
Thank you. I'm happy to be here.
So one of the reasons that I felt like it was really important to have you come on and talk to our viewers is because you have a real global perspective and a real global understanding of sort of the financial systems and how the currencies are intertwined, right? And, you know, usually we hear conversations about the US dollar or the Chinese yuan, but they're all interconnected. And partially that's because, you know, the US dollar is reserve currency. So my first question for you kind of rolls into that. So the first question is, what do you think will happen to the largest global currencies if the US dollar either has severe inflation or severe deflation? And what is that going to do to their economies?
Yeah, well, that's really the million-dollar question, and I think that's what everybody's trying to figure out. You know, with the proliferation of central banks being involved in markets, central bankers, people know the central bankers' names now. You know, 20 or 30 years ago, most people had never even heard of central bankers and certainly didn't know their names. But, you know, especially since, I suppose around the dot-com crash is when they started to become a little bit more known, and then, you know, after the global financial crisis, they became very known. And now, just in the last 2 or 3 years, they're like celebrities. And I think that, you know, because of that, and because of the great volatility that we've had just in markets over the last, call it 10 to 20 years, and really around the world, you know, currencies have become a bigger topic. And for a long time, they were never a topic in the United States because we have the global reserve currency. We only think in terms of dollars. We don't think in terms of any other currency, or at least most Americans don't. And so it really wasn't an issue. Now, if you interview people outside the United States, it's a much different answer, because for years they've had to think in two different currencies. They've had to think in their local currency, and then they've also had to think in terms of US dollars, because global trade takes place in US dollars. Regardless of what you think of the dollar, whether you like it, whether you hate it, whether you think it's a force for good or a force for evil, the matter of fact is that the world runs on dollars. And so if you're located in the United States, you automatically think in dollars. But if you live somewhere else outside the United States, you were forced to think in dollars because it impacted you locally. And so, you know, now with the proliferation of the money printer go burr meme, which, you know, is kind of a popular thing, not just in the financial community, but I think it's kind of even has gotten into the mainstream media a little bit. And when you have central bankers going on 60 Minutes and other news shows and tell them we're printing money, it starts to get out there. And so it's led to this big question. Have all of these bad debts or all of these big debts that we've issued, is that deflationary? Or is it because of all the central bankers are quote unquote printing money, is it inflationary? And, you know, I have kind of come down, I've been labeled a deflationist. And I don't necessarily disagree with that, although I think it's kind of a simplified way. The reason I've been labeled a deflationist is I believe the US dollar is going to get stronger. Now, if it doesn't get stronger and if it continues down the path that's been headed for the last year, well, then I think there's no question that the currency pairs that it's against, the euro, the yen, will rise. The problem I see with this, and the reason I'm not on board with that thesis, is that all the arguments that people make for why the dollar is going to go lower actually exist in every other country as well. You know, a lot of times people say, so from a demographics perspective, we've made all these promises, we can never pay them off, we're gonna have to print to, you know, meet these entitlements. And, you know, that's absolutely true. It's absolutely true in China and Europe as well, and in Japan. So, you know, when currencies trade relative to each other, you can't just analyze the United States in a vacuum. The other thing is that, you know, the economies are slowing and, you know, there's not enough growth. And so they have to, you know, the central banks are more involved. Well, they're not just involved in the United States. They're involved in Europe. They're involved in Japan. They're involved in Australia and Canada and South Africa. So again, it's really a relative thing. And, you know, it's my belief that the dollar will get stronger versus foreign currencies over the next couple of years. But if I'm wrong on that, and the dollar does lose value, not only against foreign currencies, but against real assets, then that's going to have major implications for the rest of the world as well. And figuring out which one of those it is kind of the $1 million question.
Well, and so in that situation, right? So what would cause the US dollar to get stronger? Is it that other currencies would get weaker? I mean, how do you sort of see that process unfolding?
Well, it's kind of a multi-pronged approach. I've developed this thesis of how I think this is going to play out over the next several years. And I've kind of in a funny way called it the dollar milkshake theory, because I think when that happens, capital is going to get sucked up into the United States. Now, the reason that I've come to that conclusion is I'm of the belief that debt has consequences. Now, there are some people out there that say
we're of that belief also. Somehow that hasn't happened, which we'll sort of get into a little bit later, because that's also a question I have for you.
Well, absolutely. And it's kind of hard. It's kind of easy to understand why some people think that it has no consequences, because this has been going on forever. I mean, the reality is you could pick up any number of newsletters right now and they would talk about all the bad debts and the fact that the currencies are not backed by anything and they're just printing more of it and it's going to go to zero. But that doesn't, you know, you could also find a newsletter from 1978 that said the exact same thing. You could find a newsletter from 1984 that said the exact same thing. You can find a newsletter from 1997 that said the exact same thing. And after the dot-com crash and after the global financial crisis, and here we are 50 years later since we left the gold standard, and you know it's still continuing. So being able to predict it exactly, I think is a fool's game. I'm not. I mean, I have an ego, but my ego isn't big enough to think that I can predict this perfectly. You know, I wish I could, but I can't. But I do think that it will have consequences, and I think if I'm wrong and it doesn't have consequences, then me and my clients will be fine. Because we have diversified portfolios that will participate if everything just continues as it is. Mm-hmm. But part of my job is to make sure that we don't get overrun by a rogue wave that nobody's expecting. And so when I see this, you know, all of this debt in the world, and because I do believe it will have consequences, I can't just ignore it. And if I had a tool that allowed me to time it perfectly, I would just sit on the sidelines, and then when it happened, I would put the trade on and be fine. But I don't know how to time things perfectly. And so I just think it's important to be prepared for it whenever it happens. And I structure portfolios as a result of that.
So speaking of you mentioned the gold aspects of it, mm-hmm. and as we all know, the United States got out of the gold back in 1973 and so forth. My question, Brent, is how do we look at gold right now? Do we look at it as a competitor? Do we look at it as an enemy? How do we look at it? Especially when you take into consideration, for example, what happened, I believe, about a year ago or so. China had to take so much gold from Switzerland back to Beijing. Russia had to move 2 planes out of Venezuela full of gold back to Russia.
Mhm.
Is there any link there? Is there something going on, financially speaking, that will lead you to believe either the dollar and the gold are enemies or competitors?
So the common perception is that they're enemies. The dollars and gold are enemies. And from the government's perspective, I think they would say the gold is the enemy. I mean, the government has spent 50 years trying to demonetize gold. Not only did they de-link it from the monetary system, but they've done everything they could to, just get it out of people's psyche, for lack of a better word.
Mhm.
However, all the governments, or most governments, still own it for one reason or another. And I think the reason that they own it is insurance. The same reason that you and I own it and other people should own it. Fiat money is the only reason it's money is because the government says it's money, and their ability to force you to use whatever form of money that the governments have a monopoly on violence, right? And or they think they do, and if you don't use the currency of the realm, they will force you to use it. And if you still don't use it, then they will punish you in one form or another, whether it's through financial penalties or imprisonment, or potentially worse than that. But I'm of the belief that gold and dollars can rise together versus everything else. Now, they can't rise together versus each other. One of them is naturally going to outperform. But I think that we're going to get into a scenario in the years ahead where the dollar and gold rise versus all other currencies. Now, gold might rise more than the dollar. So maybe the gold is going up in dollar terms and the dollar is falling in gold terms. But versus all these other fiat currencies, I think they will both be rising. And I think that for a number of reasons. But I think the other thing I would say is when you ask this question, I always have to remind myself that I'm speaking from the point of view of the United States and being a US dollar investor. But if I'm somebody in South Africa and the rand is my currency, or if I'm in Brazil and the real is my currency, or if I'm in Russia and the ruble's my currency, it's a little differently. Just because something's going up in one currency doesn't mean it's going up in another currency. So I don't know where all your listeners are from, but if they're not in the United States, they have to take that into account. Again, typically when the dollar rises, it's not good for commodities, or at least it's a headwind for commodities. Now, that's another fallacy that a lot of people think, is that if you have a rising dollar, commodities can't rise. Well, that's not true either. They can rise together, versus other currencies and versus other assets. But it is a headwind. If you have a fraction, then the numerator and the denominator is getting bigger, typically that fraction decreases in value. So it's at a minimum, it's a headwind. But I personally don't see gold and dollars as enemies. I think it's two weapons that everybody should have in their portfolio. I think everybody should own gold, but I don't think that everybody should own only gold. I think this is another mistake that a lot of people make, is they figure out, they come to the realization that fiat currencies typically lose value over time. And, the governments are always trying to extract wealth from the citizens, either through taxes overtly or through inflation covertly. And so, they got to figure out, how do you protect against inflation or the loss of purchasing power of fiat currency? And so then they go put all their money in gold. Well, I think it's a great idea to have gold, but I think it's a horrible idea to put all your money in gold. I think it's a horrible idea to put all your money in anything, in any one thing. I don't think you have to go all in on a trade. I think it's important to have a diversified portfolio and a diversified way of fighting against these various, forces that are going to come to be over the next several years.
Well, and I think that's in large part because we don't know what the future is. We have these predictions, and they can be intelligent predictions, but they are just predictions. And, we're talking about very complex systems that I think most people don't understand. And I think if you spend an entire lifetime studying it, you may not understand it.
I completely agree with you. And the first thing I'll tell you is it's very possible I'm wrong. I've said this from the beginning. There's no guarantee that I'm right on this. I think that I am. I obviously wouldn't I wouldn't plan to be wrong, right? So I think that I'm right.
Really?
I think I'm right, but I don't know
Yeah.
for sure. But the thing is, neither does anybody else. So
Yeah.
so for all the people that tell me I'm wrong, well, they're not necessarily right either. They might be right, but there's no guarantee they're right either. And so it's really, and that's why I say you never need to go all in on one thing. You know, assess the situation, come up with a probability of whether it's right or wrong, and then, you know, kind of plan for all these different contingencies. But the hubris of going all in on one thing, to me, is too much, because that assumes there's no way that you can be wrong. And I'm never going to say that there's no way I can be wrong.
Well, I think in its own way, that is a very accurate place to be, because people who are overconfident and think that they're always right are usually wrong more than they'd like.
Sure.
Well, that was the whole idea for why we're so excited to have Brent, because of the different perspective.
Yes.
I mean, I know some like Peter Schiff, like some, they don't agree with you, Brent, but to us, at least, we're thinking about it in terms of, hey guys, you need to hear the different perspective here. You might disagree. You might agree. That doesn't matter.
Yeah.
But as long as you hear a different perspective, that I'm one of those, Brent, that is to think, well, the government is printing too much money. That's gonna weaken the currency. I've been having conversation with my family overseas in Europe, and they're like, okay, what's going on with America? They're printing so much. That's gonna weaken the dollar. I said, well, I do see that going. But there are other individuals who believe otherwise. And that's the whole idea of it. So having a different.
Well, I think, and I think, you know, over the last year, well, so let's rewind 16 months or 18 months, back to the beginning of 2020. At the time, the common wisdom on Wall Street was that the dollar was going to fall and that the foreign currencies were going to rise against it. That was the consensus trend on Wall Street. Now, the dollar went up a little bit in January. It went up a little bit again in February. And then as COVID started to become more into the open and people realized it was a crisis, the Fed came out and cut. So at the end of February, the dollar was around 98 or 99, and it was up 3 or 4% for the year, despite everybody thinking it was going lower. And then because COVID started to break out, the Fed cut interest rates in early March. And when they did that, the dollar went from 98 to 94 over a 2-week period. So on like February 28th, it was at 109. And on March 9th, it was at 94. So it fell like 5% in a 2-week period. And everybody said the government's printing too much money. They're going to have to do QE. And then 10 days later after that, the dollar was at 103. So the point is this can come out of nowhere like that, and nobody's ready for it. And then that kind of goes back to why I don't think that I can time it perfectly. It's hard to know exactly when this rogue wave, or however you want to call it, is going to happen, because the monetary system has gotten so complex and the central bankers have messed with it so much that it's like this Rube Goldberg machine that there's really no way to fix it. It's all these little bells and whistles and, you know, that have been added onto it to try to plug this hole and that hole. And so now since then, you know, the dollar's down 10%. It went from 103 to 92 today or something. And it got as low as 89 6 months ago or whatever it was, 4 months ago. And so everybody thinks, well, the government has it under control. They're printing all this money. The dollar's definitely going to go down. But Europe's doing the same thing. You know, to your point, you know, everybody, you know, I think, but my point is like the common meme, the common belief, and the most talked about belief is that the Fed, there's always the Fed this, the Fed that, the Fed is doing this, the US central bank is that, Jay Powell this. But Christine Lagarde is doing the same thing in Europe. They're doing the same thing in Japan. They're doing the same thing everywhere, but it's always the Fed. It's always pointed at the Fed. And so that becomes the popular narrative. And so I think a lot of people are just trading on the popular narrative, and they're not actually sitting back and analyzing the whole situation. The reality is last year, the European Central Bank monetized over 80%, I think 85% of all central bank or all sovereign issuance in Europe. And this year, they're on track to monetize over 100% of all sovereign issuance. Now that's a lot higher than the Fed is doing. The Fed is doing a lot. I'm not discounting what the Fed is doing, but they're not doing it as much as they're doing it in Europe. And when you look at when you look at all the bonds that the US has bought, the Fed has bought like 25% of all the treasuries that are outstanding, which is a huge number, except for when you compare it to Europe and Japan, which are in the 40%.
Right.
So again,
Right.
I get it. I get it that the US is, we've got definite problems, but those problems exist elsewhere also. And so that's where I think in general, the market has it wrong. I think the popular narrative has it wrong. And again, if I'm wrong, that's fine. If the popular narrative is right, so be it. But I don't think that's the case.
Well, and I think this sort of segues really nicely into my next question, and that is about the digital yuan and Fed coin, and sort of looking at what do you really feel are the real reasons that specifically the digital yuan is on the table, and how do you see that sort of changing the landscape of the currencies of the global currency situation?
Well, I think a couple of things. I don't think that. Well, again, this will go back to the popular narrative versus reality a little bit. But so there's a couple things with regard to the digital yuan. First of all, it's kind of like the first central bank digital currency. So from that perspective, I think everybody kind of sat up and had to take notice because China was the first one to roll out, or at least roll it out on a test basis. And you've heard now, Christine Lagarde's talked about it, and the Treasury Secretary here has talked about it, or the Fed chair has talked about it, and and Mark Carney in Europe has talked about it, or in England has talked about it. So this is an area that's coming. This central bank digital currencies are on the table, and I think they're an inevitability. I think it's going to happen. But there's also a question of why is it going to happen, and what's the purpose of it going to happen, and what's the likelihood of success of it happening. So now let's go back to the digital yuan for a second. They rolled this out. I mean, it's already been rolled out in a few cities in China, and they're talking about rolling it out bigger. But so far it hasn't been a runaway success so far. Now that doesn't mean that it won't be, but just so far it hasn't really caught on, and it's not really this world changer at this point. And the other thing is, I don't think that they were doing it to become the next global reserve currency necessarily. I think they're using it as a form of control, and I think that's part of the reason that all central banks are going to do it. It's a way to more effectively, not only distribute the money to the market and to the individuals, but to control how those individuals use it. In China, they have this social justice score, or social credit system, right? Well, now imagine that you've got the social credit system. They don't like the way that you're living your life, and they knock you on your social credit. Well, why couldn't they also just knock a few zeros off of the value of the money in your account, right? And it's a lot easier to do that with a digital currency than if you're actually holding the banknotes in your hand. So,
and I think that's the biggest fear, right? I think that's the biggest fear with any currency like that is the ultimate ability that they have to knock a couple zeros off.
Well, so, okay, absolutely. So now here's where I kind of find the whole thing a little bit funny, and it just kind of blows my mind a little bit. But, whenever the digital yuan is discussed, it's like, wow, China's way ahead of us. They're going to roll out this digital yuan. It's a game changer. It's going to take over the world. It's going to threaten the dollar's hegemony throughout the world. And it's talked about in this grand weapon that China has developed. But then when you talk about the Fed coin or the US digital currency, well, then it's, they're just doing it so they can print more money, and it's going to wipe out the currency. And so whenever it's mentioned with China, it's like got this aura of, so they're so technologically advanced and way ahead of us, and it's going to be great for them. But when the exact same subject is talked about with regard to the dollar, it's going to kill the dollar. So, which is it? Why is it one way for one country and another way for another country? And so I think people need to kind of look through that a little bit and kind of think about what that is. I don't necessarily think it's going to be great for China and bad for the US, or vice versa. And then the other thing is that, just because it's inevitable doesn't mean it's imminent. And I say this all the time, but with everything, I do think these are going to get rolled out, and it could happen as early as the next couple of months, but it could also take 3 or 4 more years for it to get rolled out. I don't know for sure when it's going to happen, but somebody who says I'm going to get out of the dollar completely because the central bank digital currencies is just right around the corner. Well, these big global macro themes, they take a long time to play out.
Yeah.
It might be a couple of years before this happens. I think you should be thinking about it. You should be ready. But again, you shouldn't sell everything you own and go put all your money in one thing because you think the Fed coin is on its way.
Well, I did argue this point, Brent, in some of my previous writings, especially in the last book that I just wrote. The argument was that China's thinking in terms of the BRI, and the whole reason for that is to avoid the SWIFT system altogether.
Sure.
And yet there are countries willing to do that. I'm aware of some transactions taking place between, for example, China and Iran regarding the energy sector that is done in their own currencies, between Russia and China. That's doing their own currencies. And you're absolutely correct, Brent. It's going to take a while because the international system is not set yet for the Chinese digital yuan to take effect. I'm in the camp of believing that it will eventually. And
I agree.
And that leads to the question, Brent, of what are we be looking at? A centralized or decentralized system on a global monetary? What do you think?
So I continue to this, and I get in trouble when I say this because people, but people will confuse what I think is going to happen with what I want to see happen, right? And so when it comes to investing, I try not to be a fan of anything. Like so I grew up in Nebraska, and everybody there is a Nebraska Cornhuskers football fan.
Yeah.
And it doesn't matter whether they're really good or horrible. I still cheer for them, right? That's my team. But the problem with that
is similar here.
Right. But the problem with doing that is it removes your objectivity, right? And when you're investing, you kind of need to remove your you need to keep your objectivity, because investing, and my job is not to be a political advisor or a moral advisor, or this is the right, I'm not a social justice warrior when it comes to my clients. When it comes to my clients, my job is to make them money. Right. And my morals or my things that I think are important might not be important to them. So I can't force my own opinions on their portfolios from a moral or social justice standpoint. Again, my job is to make money. And so when I look at this, I try to take out what I would like to see happen versus what I think is actually going to happen. And so I continue to believe that the world reserve currency and the global currency system will be a centralized system, because I don't think the governments of the world will just sit back and let a decentralized system take over. Now, let me caveat this, but I would love to see a decentralized system. And I don't think that they're going to be able to just crush and eliminate a decentralized system. So I think you will continue to see this develop, but I think it could take a while. And I think there could be big conflicts between what the centralized governments of the world want and what the decentralized market wants. I would love to see a world where, there's a lot of competing currencies, privately issued competing currencies, and people are welcome to choose whichever one they want. But, governments don't like competition. And that's why they have legal tender laws. They don't want you choosing your own currency. They want you using their currency because it benefits them when you use their currency. Yeah. So I think this is just an area that's going to be continually a battle over the next several years. You guys heard me talk before about the fourth turning, and I think we're in the fourth turning, and that book has probably influenced my thinking more than any other single book, and I think that book has gotten more popular over the last couple of years, and so I'm not the only one discussing this, but the reality is that the fourth turning is a time of great upheaval. It's a time of great pain, for lack of a better word. It's a time of tears. And we've had some pain, but I don't think, we haven't had the revolutionary tears yet, right? We haven't had the big, struggles. I mean, we've had some problems, but, I still think we have some really, really tough days ahead of us. And I think we have some battles ahead of us. And, I always tell people, the fourth turning is when things are broken, not when things are put together. And I think we're still in the breaking stage, I guess is the right way to say it.
Well, and I think that's part of, ultimately a lot of the concern about the amount of debt that we have and sort of about the changes that are happening, with global currencies, with, things like Bitcoin, which, is kind of my next question is about Bitcoin and cryptocurrencies and how you've sort of watched them change the landscape globally. Some countries like El Salvador took it on as their currency, more or less, right? But and then China is either accepting it or not accepting it, depending on which month we're in. And so how do you sort of see that? How do you see that affecting sort of where we're headed?
So I think the private market is going to continue to try to develop not only Bitcoin but other digital assets. This genie is out of the bottle, and I don't think they're going to be able to put it back in. There's a number of positive developments that will come out of this, and if nothing else, the one thing I like about Bitcoin is it's raised an entire new generation's understanding of money and economics and political control and the dangers of fiat, right? So from that perspective, I if nothing else, I like Bitcoin for that reason. And from a personal perspective, I like Bitcoin. Again, I think this is an area where there's going to be a great battle. I don't necessarily think that the government's going to ban it, but it wouldn't surprise me if they do. And even if they don't ban it or make it illegal, I think there's a number of things that they can do to, tamp down on the price or just discourage people from using it. And I don't even think they've really gotten started yet. I think there's a lot more things that they can do. But even just in the last couple of months, since Bitcoin hit 65 grand 2 or 3 months ago, and since then you've seen Christine Lagarde came out and said some negative things about it. The Chinese have said some negative things about it. Gensler, who's the SEC chairman here, have said some negative things about it. They've put some things in place, and the Bitcoin price has gotten cut in half over that time period. So my point to people is not that it's going to go to zero or it's going to go away. I don't think they can get it to completely go away without shutting off the internet, and I don't think they're going to shut off the internet. So from that perspective, I think Bitcoin's going to still be around. But I think the people that think that Bitcoin is unstoppable and that there's nothing the governments can do about it, and as such, go put 90% of your wealth in Bitcoin, I think is completely erroneous. Again, as much as I might like to see it, I just don't think that's how it's going to play out. So I don't know if that answers your question or not, but that's kind of how I see it.
No, it does. And go ahead.
What I was going to just say, so that means, will it be safer to invest in Bitcoin, in your opinion?
You mean now that it's come down?
Yeah, that's correct.
60? Well, it's certainly better to buy it now than it was at 60,000.
Of course, yeah. But I'm also but I'm also thinking, Brent, long term. I mean, if we're going to be thinking in terms of the government control, where that's going to leave the question as far as investments in Bitcoin. Because there are those, I'm sure you're aware of it, that they're saying, no, Bitcoin is a way to go because it is out of reach for the government.
And that's where I disagree. I don't think it's out of reach. I think that this idea that, all you have to do is say, I lost it in a boating accident and that it's, you're fine. That I'm convinced that they have a record of every, they know all the NSA and the other government agencies and other from around the world. They know what we purchase. They know what we watch on TV. They know what websites we go to. The idea that all of a sudden there's all these transactions going on and they have no idea. I don't buy it. Now, I understand that, there's cryptographers who think that there's no way this code can ever be broken, and that it's a secret, it's a private ledger that, there's nothing the government can do about it. Maybe, I'm not willing to bet my whole portfolio on the government's inability to do anything about it. So again, I don't dislike the idea, and I don't think you should necessarily ignore the space. And I'm not telling everybody to go out and sell all their Bitcoin. I'm just saying the idea that, that its rise is inevitable and there's nothing that the government can do about it is, in my opinion, just completely wrong. I think there's a lot of things they can do about it.
Now, I wanted just to move the conversation, Brent, to one aspect that might be a little bit confusing for some of our viewers, but just to get your take on it, is the swap line.
Mm-hmm.
Well,
Yeah.
where do we see, or how do we see the financial performance, let's say, of a country, especially in our case for the United States,
Sure.
when it comes down to swap line with other countries, when considering that ratio to GDP? Where do you see that trend going moving forward, given the where the national debt is and so forth?
Yeah, so there's a couple of things here. First of all, I think before I get to the swap line question, let me zoom out just for a second to give people context in case they're not already familiar with swap lines.
Yes,
Certainly.
please.
Swap lines are a way for the Fed to give dollars to the rest of the world. Okay. Now, why? So then the question, well, why would the Fed give dollars to the rest of the world? Well, the reason that the Fed has to give dollars to the rest of the world, or why, not why they have to, but why they did, was because there's two different dollar markets, and most people probably don't know this, but there's a domestic US dollar market in which, money that circulates inside the United States economy. And then there's a kind of a quasi dollar market with, people outside the US that are doing business with the US and they're using dollars. But then there's also this euro dollar market. And the euro dollar market is dollars that exist outside the United States. So if a bank in Germany or a brokerage firm in Japan or a manufacturing facility that offers credit to its suppliers in Australia, and they hold those in dollars, those are euro dollars. So any dollars that exist outside the United States. And this whole US dollar market started developing all the way back in the 50s, right after World War II. And it's slowly gotten bigger and bigger and bigger, and more complex and more complex and more complex. And now there are entities outside the United States who have issued trillions of dollars in debt in US dollars outside the United States. So all of this credit has been extended outside the United States in dollars. And so there's huge demand for dollars by these entities outside the United States that they have to pay off that dollar debt. They have to service that debt, and then they have to pay it off. If they don't pay it off, or if they don't service it, then you get a credit contraction. And then, and if it continues, it becomes a big snowball, and then it comes all the way back into the United States. People trying to get the dollars. If they can't get dollars outside the United States, well, then they try to come in and get the dollars from inside the United States. And if it's kind of like a run on the bank, there's not enough money. If everybody takes their money out at the same time of the bank, there's not enough physical money to stop it. So the bank collapses.
Right.
Well, so this is the problem with the euro dollar market, is that there is, since it's US dollars outside the United States, there's no quote unquote rules and regulations, because there's no regulatory agency outside the United States that can regulate dollars. Because only the Fed and only the Treasury can regulate dollars. But they don't have jurisdiction in Japan. They don't have jurisdiction in Australia. They don't have a jurisdiction in Chile. So, there's this whole huge dollar market that it's like the wild, wild west, basically. And so, in 2008, last year, 2 years ago with the repo crisis, and then last year with COVID crisis, if money is not circulating, then nobody can get the dollars. If you need dollars, but the person you're transacting with won't get, if somebody owes you $10 and you need the $10 because you have to pay somebody else that you owe $8, but the person that owes you money doesn't give you the 10 they owe you, well, then you can't go pay off the debt you owe, right? So think of that on a global scale. You've got all these actors outside the United States who need dollars, but they can't get them. And so everybody's scrambling for the dollars. And that's literally what happened last March. Remember when I said it went from 99 to 94 and then back to 103 in a 10-day period? That's because everybody's scrambling for dollars. That's exactly what that was. That's a run on the global bank, basically. So assets all around the world went down because everybody's selling them to get dollars. And so swap lines are a way for the US Federal Reserve Central Bank to swap dollars for euros or yen or reals or whatever it is, to get dollars to those economies so that they can stop that bank run, so they can plug that hole. And so, and they did it very effectively. they actually did it more effectively than I thought they would be able to over the last 12 months. And the thing is, a lot of it has to do with confidence. If you believe that the government has your back and that they're going to backstop you, you will behave differently, right? And so, but if that confidence is ever lost, it doesn't matter how much they backstop you. It just won't be enough. But the point, just going back to your, I apologize for that long setup, but I think it's important to understand why you have the swap lines to begin with. Now, I am of the belief that swap lines are going to be critical in the years ahead, because this goes back to, why I think the dollar is going to get stronger. Is over the last year, there's no question that the rest of the world would love to get out of underneath the dollar as the global reserve currency. There's many countries that would like to get away from using dollars and use their own currency or use a different currency. The problem is that they owe a lot in dollars, so they still have demand for it. In some ways, the U.S. wouldn't let them, without a military conflict, to get out of it. But then, to ever get completely out from underneath the dollar, they have to pay off all the dollar debt. Because if you don't pay off your debts, then you go bankrupt, and then nobody will extend you credit, right? Okay, so everybody tells me that the world is de-dollarizing. Well, over the last year, from last March until now, they didn't de-dollarize. They actually issued even more dollar debt than they ever have before. So not only did they not—
less likely to de-dollarize.
No, and that's exactly my point, is if I ever saw the world, if they would have used this dollar weakness over the last 15, 18 months, if they would have used that dollar weakness as a time to pay off those dollars when it was easier to pay off, then I would maybe say, you know what, maybe the dollar's days are kind of coming to an end. But that didn't happen. In fact, the exact opposite happened. And so, all of this dollar debt exists out there. Now, so going again, finally getting to the question, what role do swap lines play? Well, that's a way for the Fed to get dollars outside the United States, to places outside the United States to service and pay off this dollar debt. I think what will happen is that it will be used strategically, for our allies and the people that do business with us and do the things we want them to do. When I say we, I mean the United States. It'll be used as a political tool. We want you to vote with us on the next United Nations, whatever. Okay, you get a swap line. We want you to let us have an air base on one of your islands. Okay, you get a swap line, or whatever it is. And if they say no, okay, well then you don't get a swap line, and good luck. And we'll see how you deal with that.
So will it be fair to say that we can weaponize the dollar?
Oh, absolutely, no question. In my mind, there's no question. In my opinion, the dollar is the biggest weapon that we have. In fact, I'm of the belief that the United States, at least for the near future, could win every trade agreement, every trade deal, every negotiation by just saying, okay, fine, we won't give you any more dollars, and let's see, we're going to let the dollar get stronger. Forget about this money printing. We're just going to let the dollar get stronger, and let's see how that works out for everybody. Now, there's no question it would cause pain in the United States. And that's probably why we haven't done it, because no politician and no monetary authority wants to cause bread lines in the United States, right? They're actually trying to prevent that. But if it ever really got to it and you really wanted to put the screws to somebody else, it would hurt us, but it would hurt the rest of the world much more. And the reason is because there's no other system for everybody else to go to. Now, some people will say, well, they could use Bitcoin and they can use gold. Yes, they can, but to go overnight, to go from everybody using dollars to everybody using gold, the system is just not set up for it. So, and again, if I saw the whole world at the same time in unison, teaming up against the United States, and everybody at the same time saying, we are no longer going to use dollars, we're going to use gold, we're going to let so-and-so run the system. And by the way, we're going to do this while we're fighting, 19 US aircraft carriers. Fine, then I'll start to believe that this could happen. And again, I realize it can happen again, but it's just the probability of it happening is very low.
You're talking about the opposite actually having happened. And so you're not only not seeing evidence that is happening, you're seeing evidence to the exact opposite.
Yeah, I'll give you a perfect example. So for many years, for the last, I'll call it 3 or 4 years, certainly since Trump got in there, or actually even before Trump was the president, there was this kind of this feeling that China had kind of won up the United States and that they were gaining ground, that they had outmaneuvered us and better trade deals and all this stuff. And the reality is that they a lot of people were saying, well, Europe will just side with China now. South America will side with China. Africa will side with China against the United States. Well, just in the last, year, even in the last 6 months, you've seen Europe back away from their trade deal with China. You've seen Australia back away from some of their trade deals with China. You've seen Japan back away from some of their trade deals with China. Even the African, geez, I almost said colonies, which is a horrible thing to say, but that's kind of what it is. You've seen some of the African countries start to push back on some of these BRI or Bridge Road initiatives with China. And, the reality is in the last 6 months, a lot of big players on the global stage have sided with the United States rather than choosing to side with China. Now, I'm not saying that can't go the other way, but it hasn't gone the other way. And that's, again, so to bet everything on the dollar going down, to bet everything on China beating the United States, is, surveying the battlefield just tells me that that's not the way it's going right now. So, going back to the swap lines, I think swap lines will be used as a political tool. And I think it's one of the strongest tools that we have.
Wow.
So I have,
yeah, go ahead. No,
I have a question about sort of what you just said about reserve currencies, because, there's some conversation about, does China want reserve currency status? I know that's a question that gets asked on this channel, especially during live streams all the time. Does China want reserve currency status? Is the US willing to give it up? Which, I personally think is unlikely. But, what is your take on that?
Well, so a lot of times when people say that China does not want the global reserve currency and that is not their goal, it's because they're analyzing it from an economic standpoint, and they say, they see that the long-term effects of the global reserve currency actually ends up hurting the economy, and the US is now suffering, from having the global reserve currency for 80 years or whatever the number is. But the problem is the global reserve currency is not about economics, it's about power. And it's more of a political tool and a power tool than it is about just making money. And it's hard to measure the economic impact by just measuring the money and you're not looking at all the other benefits of having the global reserve currency. And the idea to me that China does not want to be the global power is just crazy. Of course, in my opinion, of course they want to be the global power. I believe that they see it kind of as their manifest destiny, that they are destined to be the global power. And along with that comes the global reserve currency. That's the way it's always happened. The global reserve currency has always belonged to the strongest military and the strongest global power. And so the idea that China, if it was put on the table and it was said, China, you can have it, the idea to me that China wouldn't reach out and grab that is crazy. And I have the same thing for Italy would take it. Argentina would, everybody given the opportunity would take it. And so I think, of course, China wants it. Now, will they get it?
Yeah, I think that's
most people think. I think the common wisdom or whatever is that they are eventually going to get it, and I'm just not sure that that's the case. I think China has a lot more problems than meets the eye, and I think they have a lot more internal problems than they display to the rest of the world. And I don't think that they are anywhere near, at least the United States, on a military level. Now, there's no question they've made great strides in all of these areas, incredible strides. And this is not a knock on China, but I'm just saying, like, the idea that they can all of a sudden knock out the United States in a military conflict, it's not impossible. I can't rule it out, but I think it's unlikely. And
well,
so
and is that how that would have to happen? I mean, how would that transfer even happen? Because I can't imagine the US would just say, oh, it's okay, here, China, you can have this.
Well, that's the other thing is, sometimes I talk to people and I'll debate with people and they'll say, well, the US realizes it's no longer in our interest to have the global reserve currency. And so we would willingly, over the next kind of 5 to 10 years, we would willingly let it go. And again, I just think that is complete nonsense.
I don't see that happening, Brent.
I can't imagine it. Now, is it impossible? No, it's not impossible. It's just,
Sure.
again, the probabilities of that happening are extremely low.
Yeah.
For that to happen, I always bring it, is it different this time? And if you're willing to bet that it's different this time, then maybe, you're going to get pretty good odds when you bet on something that's different this time. I don't think it's going to be different this time. Historically, the way global reserve currencies are transferred is they're always taken, they're never given.
Oh.
Taken, do you mean taken militarily?
Yeah, well, either taken militarily or economically, or just by, they just say, we have the upper hand now. This is the way negotiations are going. They don't necessarily say we're going to drop a nuclear bomb on you if you don't listen to us.
Right.
But essentially, that's what it comes down to.
Well, great. Well, one last word, Brent, or final thoughts from you for our viewers. What should they be looking for? What trends do you anticipate that they can learn from or watch for? And how can they be prepared, financially speaking?
I think this is going to be more of a philosophical answer than a certain indicator that you can watch. But I think if anybody has ever read an article about them in a newspaper or an article or whatever it is, you usually read it and you realize that's not really how it happened, right? That's not totally right. And so I would say that whenever you're reading an article about something else, just because it's written in the paper doesn't mean it's true. Just because somebody says it in an interview doesn't make it true. Just because somebody sends you something as a report and the report says this is going to happen, doesn't mean it's necessarily going to happen. And this is with regards to me too, right? Like just because I say something's going to happen doesn't mean it's going to happen. And so whenever you read something or whenever you hear something, whenever you listen to something, think about it very critically. And then go find another source that maybe has the different opinion and, it kind of goes back to this, do your own research. And it sounds like a joke, but I'm serious. Do your own research and then decide for yourself and put a probability on it. And when I say put a probability on it, put you don't put 100% probability on anything. You do not go all in on trades unless you absolutely have to. Even if you think I think gold is the greatest asset in the history of the world. I think everybody should own it, but I don't think everybody should put 100% of their portfolio in it, right? I think, 15, 20, maybe 25% in some, extreme circumstance makes sense, but you don't need to sell everything you own and go buy gold. You don't need to sell everything you own and go buy stocks. You don't need to sell everything you own and go buy Bitcoin. Be prepared for multiple scenarios, read and listen to everything critically. And then, at the end of the day, you got to take responsibility for yourself. You don't blame it on because, this guy said this on YouTube, or I saw this on Twitter, or I had a conference and they said this was going to happen. At the end of the day, your responsibility for yourself. So I don't know if that answers your question, but that's the best I can do.
It does. And I think that's very in line with the philosophy of this channel is, our tagline is stay informed. And that is go and find information from different sources and so that you can choose for yourself.
Well, thank you so much, Brent. We truly appreciate you carving out time for us. And I am sure our viewers will find your information very, very insightful. So we couldn't thank you enough.
How do they find you? Social media, website?
Yeah. So I have a website, it's santiagocapital.com. All that's on there is my contact information. Due to the fact that we run some private funds that are not, you can't advertise to the public. Other than my contact information, there's not much there. But I'm pretty active on Twitter. You can look Santiago Capital. Santiago AU Fund is the address. And then, I think if you search for me on YouTube, there's a number of videos. I'm always happy to come back and talk with you guys again. I enjoyed this, and to the extent that it's valuable.
Absolutely. Thank you.
And do you have, by the way, Brent, do you have clients from overseas?
Yeah, I have a lot of clients from overseas.
Okay, so just for our viewers in case. So, well, once again, we thank you so much. So we appreciate it.
Absolutely.
Let us know your thoughts in the comments. Also, be sure to check out our other videos, and don't forget to like, share, and subscribe. And as always, stay informed. Till next time. Bye-bye.